Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's July 25th, 2023. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below, make sure you're signed up for our email distribution list in the description area. That way you can be notified whenever we post these videos. And just as a quick aside, remember David is out of the country right now celebrating an anniversary trip with his wife. So I think he'll be back sometime in the middle of next week, but his presentations will not be happening here in that time period. So just be aware of that schedule change. At the bottom of those emails, you'll also find which stocks are giving you overbought and oversold cluster signals within the S&P 500. In addition to that, we're heavy users of Twitter, or what Elon Musk would call X these days. If you're not doing so already, I would encourage you to follow me. My handle is @BrandonVanZ, and we really appreciate those of you that click like and retweet on these market outlook related posts. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, so with last video coming in under 100 likes, it looks like your guys' voices have been heard. I will keep it short and sweet for you here today. I'll do my best. I'm usually a little bit longer in my analysis than that, but I will try to practice some brevity for you here today. And as promised, keep it under that 15-minute mark with less than 100 likes. Remember, if you want it to go over 15 minutes to stretch towards an hour with a trade application example and all that kind of stuff, make sure you're clicking like for us there on Twitter, or what Elon Musk would call X. I'm not sure how that's going to be talked about in the future. Nonetheless, we appreciate those of you that do go out of your way and take the 5 seconds out of your day to help us along with that. So let's get to it. You can see here I've got the S&P 500 heat map pulled up in front of us. It was a bit of a mixed day. The S&P 500 was up 0.28% here today, so it was a reasonably strong performance, and I think that was largely due to the fact that most of the mega cap tech-oriented companies were higher here today. But in a kind of a strange way, the star of today's markets may have been the Dow Jones Industrial Average, mostly because it's on quite an epic streak here. They completed their 12th day in a row to the upside on the Dow Jones Industrial Average. That is the best showing in over 6 years. In fact, if I heard it right earlier today, I think they were saying that the longest streak in the history of the Dow Jones Industrial Average is just 13. So we could be tying that record tomorrow if the Dow Jones does manage to close up. Of course, tomorrow is a big day with Jerome Powell and the FOMC in focus, determining the future for interest rates. It is widely expected that we'll get 25 basis point hike tomorrow. What is more important is what the expectations are beyond tomorrow, which we'll probably learn through the press conference and other information there. So buckle up. We could have some volatility tomorrow as a result of that. But assuming markets want to be bullish tomorrow, there's a decent chance that we could literally be in the midst of the longest streak in the Dow Jones history. And remember, the Dow Jones goes back a long, long time, much further back than something like the NASDAQ composite. So it's really saying something there. So to say that we've been bullish is a bit of an understatement. It has been remarkably bullish in this market environment that we find ourselves in the midst of. Let's talk through the S&P 500 heat map that we have here in front of us and mostly point out some of those big tech areas. Microsoft was up 1.7% in the normal session today. Google was up 0.75 in the normal session today. Now, both of those reported earnings after hours. Normally, I'd go through and take a look at all those with you, but again, since today is only going to be a 15-minute video, I've got to kind of speed it along, so we won't look at all of them. Maybe just the high-level overview that you'll want to know, as I just mentioned here on Twitter a moment ago. There was the good, the bad, and the ugly. The good was Google. Google was up somewhere between 6 and 8% after hours, so did really well with their reaction, and there's a decent chance that they will be hitting a 52-week high first thing tomorrow morning. It won't be an all-time high, but it looks like they will be hitting a 52-week high if they can hold these after-hours gains. So that was the good. The bad was Texas Instruments. They were down about 3 or 4% after hours. And then the ugly was Snapchat. Once again, Snapchat getting annihilated on their earnings announcement. They were down like 16 or 17%, but it is just uncanny how many times Snapchat has seen its stock get snapped on their earnings announcements. I swear it's been like, somewhere between 7 and 10 times in the last, let's call it 5 years, that their stock has been down somewhere between 15 and 25%. Of course, that is not a normal reaction for a typical company, but Snapchat seems to be an exception to the rule there. So that's the good, the bad, and the ugly. Regarding Microsoft, of course, that's important to discuss as well, considering how they are the second largest publicly traded company in the United States. They actually were trading fairly flat the last I looked. They were down just a little bit, but they'd actually recovered pretty nicely from some of their early session losses in the after-hours session. So the first reaction to their earnings was a bad one, but they have clawed their way back towards break even. So it doesn't look like it's going to amount to much of a disastrous day there for Microsoft tomorrow, but it will be apparently a celebratory day for Alphabet/Google shareholders tomorrow. So those two kind of in focus here, not only during the normal session, but in the after hours as well. Back to the normal session, you can see Apple was up 0.5%, somewhere right in there, 0.45 to be exact. So about 0.5% of a move higher. You saw that Meta was up about 1% here today. So, of course, that's the old Facebook. And then we've got NVIDIA. That was up 2.4% here today. So that was a really strong day out of what has been the story stock of 2023, at least in my opinion, NVIDIA has been. And then off to the right-hand side, you can see the final two of the Magnificent Seven. Amazon did manage to close higher today. It was up 0.26%. The seventh of the Magnificent Seven, Tesla, did not manage to kind of follow suit with the other six. They did close lower today by 1.4%. But on the whole, 6 out of the 7 up nicely here today. That provided a bit of a lift in general for the markets. You can see that the industrials were kind of an interesting place here today. First of all, you can see Raytheon was one of the worst performers in the market, down 10% here today. They reported their earnings, but more importantly, they reported that they're going to have some recalls on some of the engines and different things that they work on behind the scenes for airlines, where it's basically going to have to pull some of those airplanes off of service for a while to kind of double check to make sure that the products were installed the right way and that they were manufactured the right way. So it didn't look like the stock market appreciated that, as it will probably be a costly endeavor in order to do that. On the flip side of that conversation, you can see a couple of nice earnings movers in the industrials to the upside. Here's General Electric up 6.27% today, and then 3M up 5.33% today. Of course, both of those have seen better days in years past. GE has actually turned around pretty nicely here in the most recent year, but they are kind of a shadow of their former self from a decade or two ago, whereas 3M has been struggling through lawsuit after lawsuit here more recently. However, they are attempting to kind of try to make a move higher. They're priced at about $110, and they were flirting with double digits previously. In other words, down there at $99. And so they're about $10 off their lows. Whether it amounts to much, we shall see. But at least for one day, they were in the winner's circle here. In terms of other big movers, a lot of the other big positive movers were smaller companies that were not nearly as influential in the market. Here's one that was shining today. That's Packaging Corp of America. It was up 10% here today. The materials actually had a very strong day. A lot of green down there in the materials area. We also saw that Pulte was up 6% here today. So those home builders just keep on impressing to the upside. In the healthcare space, we did see Zoetis up 2.5% and Intuitive Surgical up just over 2%. So they helped out there to a degree as well. Energy seemed to have a pretty decent day. A lot of the bigger energy companies did close in the green, so they seem to be one of the more consistent sectors out there today. In terms of consistency on the bearish side of the coin, I'd probably award that to the financials. You can see here kind of where I'm circling my mouse, the financials were largely in the red. There's a handful of those kind of data service provider financials that were in the green, but the traditional banks and insurance companies and what have you did have a pretty ugly go of things here today. U.S. Bank down 3.5%, Bank of America down a couple percent, Wells Fargo down a couple percent, and so on and so forth. So financials kind of cooling down a little bit, but remember they've been on a pretty nice little tear here over the last couple of weeks once those banks kind of kicked off the earnings season there. But today they were just not having it in the financial world. All right, let's go ahead and quickly pop on over here, take a look at the specific breadth numbers on the S&P 500. You can see that 290 of the 500 stocks in the S&P 500 finished in the green today. So that was good for about a 58% win rate there in the S&P 500. Now on to our 4 grid, and you can see it was largely a green day for the markets. All 4 of these major market indices did close in the green, a couple of them just barely. Let's talk about the Dow here real quick. It was up 0.08%, so wasn't much, but hey, it's good enough to continue that epic streak that it's on 12 days in a row to the upside. For the Dow Jones, you can see it hit a 52-week high here today as well, and then you'll notice that the 52-week high tag shows up under the S&P 500 chart as well. So both of those kind of blue chip oriented indexes closing at 52-week highs here today, with the Dow up 0.08%, the S&P 500 was up 0.28%. You will notice that down below, the NASDAQ was actually the leader here today. It was up 0.61%. However, it's the only one of the charts that actually no longer has a strongly bullish intermediate posture. Notice today that light pink background crept into the NASDAQ composite because that green line, the intermediate line on the market forecast, fell out of the upper reversal zone. Now we got to be careful thinking too hard about that, because as a reminder, there's been a handful of days in the last 3 months where that pink part of the chart did show up. There was kind of 3 or 4 different attempts of that before. None of them really amounted to much of anything in the way of selling. And especially right now when we're still well above a rising 30-day moving average, you know, it's probably important not to jump to conclusions here and just assume that all of a sudden the markets will start falling apart. We'll see. We'll start seeing breaking down of moving averages and support areas and things like that. And if our mind needs to change around that, then we'll be more than happy to provide that. And maybe tomorrow is the catalyst, right? Maybe the market doesn't like what it hears out of the FOMC meeting. But for right now, I think we got to give the markets the benefit of the doubt. Markets have been quite bullish for a long time. And, every time somebody's tried to bet against the markets here in 2023, they've usually lived to regret it. So today the NASDAQ was the star. However, it's the only one that's showing a little bit of turbulence there on the posture setting mechanism. And then the Russell 2000 was up today, but similar to the Dow, just barely. It pretty much was flatlined, 0.02% move there higher in the Russell 2000. Remember, the Russell 2000 has a lot of bank and financial stocks, and with that particular sector being out of favor, like I showed you a moment ago on the heat map, that probably put a little bit more pressure on the Russell 2000 compared to some of these other indices out there. But it retains its strongly bullish posture. You can see that all 4 of these charts continue to trade above rising 30-day moving averages, and 3 out of the 4 charts remain with strongly bullish intermediate postures according to the market forecast technical indicator. Let's take a quick peek here at our 3 green arrows chart. This is chart 4D for those of you following along at home. And you can see that things look reasonably strong here as well. It's not perfect, but better than average. The top 2 charts, the S&P 500 and the Dow Jones Industrial Average, have that light green background color telling us that they have 3 green arrow signals as of this moment on the 30-day moving average, the MACD histogram, and the stochastic. And that makes sense, since both the S&P 500 and the Dow Jones are the 2 that have achieved 52-week highs today. They're the ones that have retained the strength across the different technical indicators as well. Whereas the 2 bottom charts, as you can see, that's not the case. The NASDAQ has actually 2 red arrows and 1 green arrow, and then the Russell 2000 has 1 red arrow and 2 green arrows. So the 2 top charts retain the 3 green arrow status. The other 2 have a mix. And then real quick here on the 1040 crossover method, you can see that we remain in a bullish longer term position with golden crosses on all 4 of these charts, where the 10-week moving average continues to trade above the 40-week moving average. All right, that's our 15 minutes. Again, if you like these shorter, quicker videos, then don't click like on Twitter. If you prefer the lengthier hour-long ones that include trade application examples, take the 5 seconds out of your day to click like for us. If we're up and over 100 likes, I'll be more than happy to do that the next time I'm scheduled to do the video, which will be on Thursday. Again, remember, David is out of the office right now, but I'll look forward to seeing you all on Thursday. Until then, best of success with your trades and your investments. Goodbye for now.